Hello everyone, my name is Crystal Talawai and on behalf of the ANZ, it's my absolute pleasure to welcome you to our Business Warrant of Fitness webinar series and especially to today's part 3 and our final instalment in this particular series of webinars, Maintaining Momentum, Accountability and Focus During Challenging Economic Cycles. Here at ANZ, we are super passionate about providing a platform of virtual learning for business owners like today's webinar. And we also have a great playlist of previously recorded webinars on our BizHub site, which I will talk more and take you through later. What we do know is that economic downturns can be challenging and daunting for many business owners. But with the right strategy, it's possible to not only survive but thrive during challenging times. With that in mind, joining me today and returning for part 3 is our guest speaker, the fabulous Matt Rogers, one of the directors from BM Accounting Limited. Good morning and a big welcome back, Matt.
Yeah, thanks, Crystal, and thanks everyone for joining us this morning. Looking forward to chewing up the third part of this fantastic series, and thanks very much for having me.
Great, we're going to hear more from Matt very, very soon. Before we do get started, let me take you through what I like to call the really good to know stuff. The content we will take you through today is provided as a complimentary service on behalf of the ANZ. It's deemed for information purposes only and does not constitute advice. However, it's really important that if you do hear something today that triggers for you the need to seek professional advice relevant to your own unique business situation, then please do feel free to reach out to the specialist of your choice who is qualified to give you that advice. On that note, team, it's now my absolute pleasure to hand you over to Matt. Thanks, Matt.
Yeah, thanks, Crystal. I'm going to talk to you for about the next 35 minutes, but really keen for you to walk away with some really neat pointers and things that you're going to be able to use yourselves. So if there is anything here that triggers for you or that you'd like to ask something more specific for your own situation or some extra context on anything I've talked about, please drop something in there during the presentation. I'll see if I can cover that off as we go, but I'll also answer those questions directly as best I can at the end. So yeah, do please use that functionality and get the most out of this session. So this is our third one of these. Hopefully a few of you have been part of the first couple of sessions. I will refer back to those a couple of times. As Crystal has mentioned, those are available in the business portal at ANZ if you do need a bit of a refresher to jump back in. Lots of really good tips and pointers in there. But today's agenda is really about accountability and checking in. It's what sort of pulls everything that we've talked about previously together. So very quickly, what we will go through today, I'll reinforce the 5 Fs that I go through with all of my clients for those of you who haven't seen that yet. And then we're going to spend a bit of time talking about the importance of regular check-ins and how to get the most out of those, what those should entail, what you should be looking to achieve in those and how you get the most out of them. And I'm going to talk about that concept of really creating accountability. And this is the absolute crux of whether this side of your business becomes successful or not, is really about requiring and having a very high standard for what accountability is. It's one thing to check in on a regular basis and have good numbers and things, but if we're not really creating that accountability and doing something with that information and having good conversations about who and what and when, then it can all just be a little bit of a waste of time. So that word accountability is going to come up a lot today. And then I know a number of you have come in with questions and things around protecting cash flow and some of the challenges that the current economic climates provide there. We're going to spend just a little bit of time just talking about some strategies you can employ immediately in your business around the working capital cycle and trying to get cash moving as quickly as possible and circling through your business, and also a little bit of an aspirational piece on diversifying revenue and getting our brains thinking about that side of things there. And then, as I say, a chance at the end to refresh and answer any questions you might have. So to the 5 Fs. So again, for those who haven't seen this, this is a framework that we use with all of our clients here at BM Accounting. The first webinar that we covered off back in June was all about future and ensuring and working with our business owners to make sure that they've got some idea of where they're trying to head to and what success looks like in a time frame that works for them. So a lot of really good pointers in that first webinar for starting to have that process of thinking and what sort of tools and tips you might have to actually create that documentation in your in your own business and for yourself. And a key part of that is also really starting to identify the risks in your business. So having a good framework for identifying the risks and, more importantly, working closely as to what you can do to mitigate those and regularly checking in on those. Last session 2 weeks ago, for those who were part of that, was focused on the foundations level of this framework. So having had an idea of where you're trying to get to and what the future looks like and what you're aiming for as a business owner, that was all about having good, solid information to hand on a regular basis, getting the most out of your accounting system, and having a really good understanding not only just of the numbers that accounting system provides to you, but more importantly, the drivers that go into those numbers. And we spent a lot of time in that session talking about those drivers, particularly around the sales side of your business and exactly what type of things you might want to be tracking to understand how you get to those sales numbers. And we find here with our conversations with business owners that really knowing what those drivers are makes much easier as a business owner to go about trying to change things and do things differently when you're talking about numbers and drivers that you can actually feel like you've got control and not just an end number like a sales figure on your profit and loss report. So some really good solid information in that webinar. I encourage you to go back and refresh yourself with those if that's not resonating with you at the moment. And then the third section, which is where we're going to have our focus today, and aptly that is the focus section, that is this culture of actually checking in regularly. You've done all the hard work to actually have a bit of a plan of where you want to go. You've got good solid numbers to hand. You've put a budget and things together. The focus piece is now creating that accountability, having a good check-in process, and making sure you're giving yourself the best possible chance to actually achieve those goals, find out where things aren't going quite as well as they might otherwise be, and then more importantly, take action and create that accountability. So by the time you get to this stage, you would now have some sort of very simple strategic plan, idea where you want to go. You'd have a risk plan and an idea of what risks there are and what sort of things you might like to or look to be doing to mitigate those. You'll have a very simple budget or forecast in place with some good drivers and things there, and you'll know what those key 2 or 3 drivers are that you really want to be focusing on, and you've got good information coming from your reporting system. So again, refer back to those webinars for how to get to this stage. But now what? You've got all this fantastic stuff. How do we tie all of that in together? And that's where this concept of regular check-ins becomes really, really important. So what we're doing with these check-ins, and if I just go back through those or 5 key areas that I think you want to be checking in fairly regularly on. One is your sales side of your business, your sales targets, having done all that work on your drivers and what you're trying to achieve from a sales point of view. That's something that I would be checking in on and reflecting on a weekly basis. I think that's something that you want to be looking at and making time for yourself to check in. How are we going? Are we comfortable with the sales side of things? Whether you're a little retail business or a hospitality business, how are things going? What do the trends look like there? If you're construction and trades, again, you're looking for those trends. You're trying to go back to those drivers. What are our leads looking like? How well are we going converting those leads? What's the average sale price that we're getting in our cafe or from our construction job that we're doing? Whatever those drivers are that you've looked at, you're reflecting on those on a weekly basis. And if the trends start to deviate significantly from what you had predicted or what had gone into your numbers, that's your chance on a pretty regular basis to check in against those and do something about it. Your overhead targets, we spent a lot of time 2 weeks ago talking about, really being quite critical about your overheads and what was important in your business and where potentially you wanted to put a little bit more focus or attention, and are you getting value for investment? That's something I'd be looking at on a monthly basis, reflecting on that budget, seeing where there's big variations in your overheads, asking that question, am I getting value for money for all of these things that I'm spending money on? And if anything has gone wildly differently from what we expected and what we had in our forecast, we can answer that question on a monthly basis. Why? And what are we going to do about it? Our cash flow targets, and cash is super important, as all of you will be discovering on a regular basis. That's a daily thing, I think. That's something you check in on a daily basis, and you're going to look at those really key elements. What does the debtor book look like? What's our work in progress? What's in production at the moment? What are our creditors look like? All of those key things to do with cash, what tax is coming up, what are our commitments to the bank. That's something that I think you want to be checking in on a daily basis. So we're looking at our debtor book. Who owes us money? Who hasn't paid? What do we need to do to follow up? We're far too passive generally as a lot of Kiwi business owners at not necessarily being over that side of things as much as we should be. And cash is king. A business will survive as long as it's got cash moving through it reasonably well. It can survive without profitability as long as there is cash for a little while. A business without cash will not last very long at all. So that's a daily check-in or process that we can talk through in a bit more detail a bit later. And then your strategic goals and your risk mitigation, I think those are every second month. And like we talked about in the first session, they alternate. This month you might look at your strategic goals and check in on how you're going against those. Next month it might be just a check-in on what you'd listed in your risk profile, and is there anything that's changed there that I should be aware of, and do I need to take any action as far as anything goes there. So what I'm talking about with these check-ins, we're regularly doing something about this. We're making time and we're creating importance for this. It's not just something that we do cursory. As a business owner, as a manager of your businesses, leaders of your business, this is one of the most important things, if not the most important thing you can be doing. And it's very easy to not find the time for this because we're constantly fighting fires, or we're dealing with whatever phone call or email or problem has presented itself today, and this sort of stuff can get thrown to the bottom of the importance scale and maybe not even looked at if we've had a particularly bad week and a whole bunch of things have gone bad and we're just dealing with fighting fires all the time. I would challenge that thinking and say this is the stuff that you should actually be making time for first and foremost, and it doesn't get moved for anything. Whatever your check-in process and whatever you agree is that cadence for when you should be checking in and having these these times to reflect on your numbers and think about what your actions are going to be, you make sure that time is sacrosanct. You put it in the calendar and it happens regularly every week. And I would have it at the same time, whatever the cadence is for these things. If you're going to have a weekly process for like your sales target, do it at a time that's going to suit you, and actually make sure that that's one of the most important meetings you get to every week. If that's Tuesday morning or Thursday afternoon or 10 o'clock on a Friday night, whatever works for you, but make sure that you've got that regular check-in and it doesn't move. You want to be identifying deviations, so you're looking for where things are drastically different from what you expected, either positively or negatively. We're talking probably in a slightly negative or a challenging economic environment at the moment, but equally it might be time for us to celebrate success where things are actually going better than we expected, and a chance for us to be quite positive about a few things. So we're looking for those positive or negative deviations, and we are going to make a plan. We're going to address those issues, and the three things that you really need to think about there is the what, the who, and the when. What are you going to do? Who is going to do it? And when are they going to report back? What's the next step? And if you don't have those three elements, if all you've done is gone in and said, my motor vehicle expenses are wildly different from what I expected, or the amount of people that I thought was going to come into my store last week is wildly different to what actually happened. Great to know that, but if you don't then make the plan and have the what, the who, and the when, it's really going to struggle to get any traction and do anything differently. I promise you, by doing this sort of stuff and having these regular check-ins, it's really going to improve with your feeling of being in control of your business, your mental health. There's an awful lot of communication and stuff around this sort of stuff at the moment. And as a business owner, as a small business owner myself, I understand how challenging these things are. Quite often you can feel that it's you against the world. You're juggling all the balls, all the buck stop with you. You've got to keep all these different things going. It is a really, really challenging place to be. But if you just dedicate the time, you're going to feel much more in control. It might not necessarily solve all the problems, but you're going to feel that you're more in control, and that's going to have a huge change in your mindset and your ability mentally to tackle these problems and actually think, yeah, I can take a positive step forward. I can do one small thing in this sort of area, which is going to feel good that I've moved things in a positive direction. So it's really, really good for your mental mindset, your feeling of control as a business owner, to be making time to do this. Make sure that you have got really clear targets with, so hopefully if you've done the work from what we covered in the previous couple of sessions, you've got some very clear metrics and targets and things in there, but make sure there's no ambiguity around a few of these things. If you're talking about variances in your expenses, for example, make sure you're clear when where that line is for you. If something's 5% out on what you expected, is that a problem or not for you? Maybe the level is 10%, maybe the level's 15%. But just set those expectations that will be different for each and every one of you, but where you're actually looking at the variations. Nothing in business is ever as simple and linear as we'd expect. Everything's sort of moving and being variable all over the place. So we need to pick out the 2 or 3 key things at any given time that we should be focusing on. And so you need to have those very, very clear targets in your mind when you're going through this process as to what is going to get focused on and what's actually the highest priority. And you're really relying on that real-time accurate information. If you identify from this regular check-in process that you're having to make mental adjustments all the time, or that the numbers aren't quite timely enough, then do something about that. There are so many wonderful tools, wonderful people to talk to, the business mentors and things that we've talked about, some of the great relationships that you'll find with your bank and ANZ, those sorts of guys, with your financial advisors, accountants and things, if you've got a good relationship there, or even just within your network of fellow business owners and supporters and things there. Ask questions, be open, talk about some of these problems. I'm not getting good enough information as far as this goes. There is plenty of information out there to help you to try and streamline that information. We live in an unbelievable world of data. There are very few excuses these days for not having the right information to hand at the right time. So if you're feeling that you're having to make adjustments mentally and you don't have good data to make these decisions or to really understand where things are tracking, do something about it. Ask a question and try and find a different way of doing that gets you that information far more timely and far more accurately than you're getting at the moment. So having had doing these check-ins, having good information and things in there, we understand why they're important. This culture of accountability is absolutely critical to success here, right? Who is responsible? Who has ownership of all of these different areas? Now, if you are fortunate enough to be in a slightly bigger business with a bit more of a team and things around you, then make sure that you are being very clear and very deliberate about some of this responsibility and ownership. If you've got a key manager or someone there, be very deliberate about where their responsibility begins and ends and what they're looking after and what your expectations and things of that. That expectation also flows through to a lot of your other providers within your business. So when we're talking to our team members, our customers, our suppliers, this expectation of accountability that you're trying to create in your business goes to all those different levels. We're communicating with our customers right up front about what we expect around our payment terms and things. We're not sort of leaving that as a little bit of a grey area, and when a customer goes 2 weeks past the due date and we just ignore it because we don't like the conflict and we don't really want to pick up the phone and have a bit of a niggly conversation. It should never get to that because we're having the conversation ahead of time. We're creating that expectation, that accountability. You're doing this at all levels of your business and wanting people to take ownership, to take responsibility. And as a business owner, you need to be comfortable to be able to articulate that and provide that framework, and you will see some really strong benefits from doing that. So when you're setting those goals, those responsibilities and outcomes, make sure that you are being very specific, that and then we're going back to our SMART rules here, that things are very measurable. There's a key number or something there that you can actually measure against, that they're achievable, that we're not setting absolutely unrealistic goals, that they're relevant, and that they're timely. You've really got to be able to very clearly articulate what your expectations and things are, what your expected outcome is, what those targets and things are. And people, when they have that clarity, when the sands aren't shifting underneath them all the time, they will have a much better chance of actually getting good results and working hard on what you've wanted them to focus on. The other key thing here is to really try and simplify that and get back to the one or two things that you really want them to be focusing on out of each of those. So if we talk about those 5 different areas that we talked about beforehand: sales, overheads, cash flow, strategy, risk, at any given one of those, we're not focusing on the entire gambit of things. We're trying to bring it back to what are the 1, 2, at the most maybe 3 things that we might be focusing on. If you've got 5, 6, 7, 10, 20 things to focus on, we're never going to get there. We're all running small businesses. We're under time pressure. We've got a lack of resource. You need to get it back to, at any given time, 1, 2, maybe 3 at an absolute outside of things to focus on. There might be 10 things that all need a little bit of focus, but you need to pull it back to just the 1 or 2. That's what we're going to focus on. Those are the highest priority. That's what's going to solve 3 or 4 other problems by doing that. And once we've got that right and that's going well, then maybe I can get to problem number 5 and 6 and 7. Okay, but you've got to pull it back and give that clarity to whoever's responsible, whether yourself or whether a manager or a team member or anyone else, that there's the 1 or 2 things that you really want them to focus on, and what you want them, that number, that goal to sort of look like. Okay. In terms of implementing this sort of stuff, consistency, some sort of standard operating procedure is really important. There's a lot of opportunities out there to automate and simplify a lot of these tasks and things now. So this is all about, what report are we running, who's running it, when are they running it, get that automation, get that consistency in what you're doing. If, for example, this is around debtor management and chasing up overdue payments and things, have a whole bunch of templates in there. What's the email that gets sent the day after an invoice falls overdue? What's the phone call pitch? The key points that someone needs to raise when they're going to ring a customer 3 days after a bill has fallen overdue and the email that we sent 2 days ago has been ignored. What's the follow-up letter or the follow-up process? Try and systemize as much of this stuff as you can, and that way you'll get a wonderful level of consistency. People feel very comfortable about what they're trying to do at any given time, and there's again a much better chance of actually getting good, solid objectives around this sort of stuff. The KPIs, so just a checklist to go through here. What's the objective at the top end? What are you trying to achieve? If it's cash flow, then obviously it's trying to get cash in the door more quickly. If it's overhead management, it's getting as close to that budgeted performance that we said. If it's our sales target, it's getting those 2 or 3 key drivers as close or exceeding what we expected, because that's creating those sales numbers that are ultimately driving all of our outcomes and things there. So what's the objective? What's the relevant driver that you're focusing in, and what's the target? Those are, again, back to our SMART stuff, those very key elements. Who is responsible for achieving that? Who is the one who's going to be talking at that meeting or checking in? Again, a lot of the times this might be you, and that is the world of small business ownership. A lot of these things fall on you. But be realistic about how much you're taking on yourself. And if you're not able to get across all of these things, then either you need to simplify and bring it back and cut down the to-do list and focus again on 2 or 3 things this week that you really got, that you've decided, because you've sat down and looked at the 7 or 8 things that were on your list. right, what is the 2 or 3 most important ones, and bring it back to that. But if you are delegating and you do have that opportunity to have a 2IC or someone else who looks after some of these things, be really clear on what you're sort of after. Monitor the regular check-ins that things actually happen, and then adjust your expectations and change the way you're doing things, or set those different goals or what's going to happen out the back of these meetings. Be very clear and overt, and again, the who, what, when. Every single time you're having these conversations, you've identified an issue. Who, what, when. Who's going to do the thing? What are they going to do? And when are you going to check in on progress? Okay, if you're answering those 3 questions more often than not, or every time, then more often than not, you are going to start getting some success and some positive movement. It may not completely fix the issue. It's not quite that simple. If it was, then a lot more people would be doing what you guys are all doing and be in small business management and ownership. But just taking that positive step is a real success. And that's the last thing that I'd say on this, is celebrate the success. Far too often we do get really bogged down with a lot of the things that are not happening as well as we'd like. Where we have made it, where something has improved slightly. We saw that our customer numbers, through our store, or the amount of inquiries into our construction business had dropped off the last 2 or 3 weeks. We've made a concerted effort to actually get on the front foot, pick up the phone, and be a lot more overt and a lot more deliberate about chasing down some of our leads, or going into the file and chasing up some of these guys that we hadn't heard from for the last 3 or 4 months. And because of that, we've now looked at our numbers, and this week we've improved by 20%. We're still not back to where we wanted to be, but celebrate that success. That is a wonderful small step in the right direction. Okay. Take that as a real positive, and that's a real endorsement that what you are doing is the right stuff. Keep doing more and more of that. If we'd made that decision and done something there, and we'd continued to see that key metric slide, then there's the opportunity to, because we're checking in on a regular basis, there's the opportunity to actually say, man, that traditional way of doing something is not working. I need to go back to the drawing board and come at this from a different angle and think about a different way, and how can I be quite aspirational and challenge myself to still get to that outcome. We're still trying to simplify things at all levels. I've got that one key metric that I'm trying to change. What I've done this week or the last couple of weeks hasn't moved the needle the way I wanted to. What else can I do? And again, because you're having this regular check-in, you're creating this accountability, you've had clear who, what, and when conversations. That gives us the opportunity to then go and do something differently, and give it another try, and hope that that's going to move that needle. Once that needle starts to move or gets back to where we want it to be, then there's our chance to go and solve another part of the business that might be not quite where we wanted it to be. And just be sure that first needle that you've looked at, is one of the top 2 priorities that you've got. Don't go and fix the easiest thing first when there's a much bigger solution out there that might sort of solve a whole bunch of other problems in your business. I do want to talk about cash flow. It's the elephant in the room for a lot of us at the moment. I know a number of you, when you've registered for this, have said that this is a key area of concern for you. And I just want to bring to your attention the working capital cycle and the way that cash flows through our business. So effectively, what happens from cash to cash? We take our cash, we go and buy some materials, some raw material and inventory. For some of us who are out there selling services and things, they're selling our time. There's potentially not quite the same draw on cash at this particular point, but we use our cash, we go and buy raw material and inventory. We then put more of that cash, or we add more cash to that raw material and inventory, and we produce something. And this is where we're paying wages or the associated costs of production. It's sucking up more cash at this point, and that creates something that we've now fundamentally got to sell. Once we've got that product to a sellable state and had the conversation with the customer and got that sale as far as our accounting system says, we then send an invoice out to our customer, and it becomes accounts receivable or debtors on our balance sheet. And then finally, that customer actually pays us, and it finally turns back into cash again. So what you can appreciate is that for some businesses, that cycle of cash is very short. There's a very short time frame of how quickly cash turns into purchases of raw material and becomes finished goods and then becomes debtors and turns back to cash. So if I, for example, look at something like a coffee shop or a hospitality business, that working capital cycle can be much quicker. We're generally running a cash business. Generally, most people will pay us when they come in and transact with us. We don't have a huge amount of raw material and finished goods. If you're a big trade business or a manufacturing business or someone dealing with an awful lot of stock and a lot of labour and things there, this working capital cycle can become significantly bigger, and there's an awful lot of hiding places there where your cash can actually be tied up for long periods of time. So a metric that I quite like to run through with my business owners, particularly those that might have reasonable debtor balances or reasonable inventory balances, is to look at what the average days at any given time for us, what we call our inventory days. So how long on average cash is tied up at that inventory and production stage of the business. How long our cash is tied up at accounts receivable, how long on average it takes for us between sending an invoice and actually being paid for that invoice. And then I also look at our accounts payable time. So how long on average it takes us from receiving a bill that we need to pay to us paying it. And if I add those, or if I do the calculation there, our inventory days plus our receivable days less our payable days gives me basically our working capital cycle. Now, I've just gone back through the last 10 of those that I have done, and on average, and this is across a wide range of businesses, really wide range of turnovers and business sizes and things there. I've just grouped them all together just to get a bit of a look. But the average days inventory plus accounts receivable less accounts payable is 109 days across those 10 businesses, the last 10 of these analyses that I have done. So that's 3.5 months for the average business from cash at the top of that cycle to turning back into cash at the top of that cycle. Now, the other thing I do within that analysis is I will generally work out if we were to improve those metrics by a single day, so basically have 1 day less where our cash is tied up in inventory, or 1 day less where our cash is tied up in our debtors, we're collecting our cash 1 day faster, or 1 day more for our accounts payable. What does that look like for cash? And again, running that analysis over those same 10 businesses, 1 day improvement in inventory, and again, a very crude measure, but that's $13,000 worth of cash on average is what that represents to a business. Our accounts receivable, improving things by a day on average, is $19,000 of cash improvement, and paying our bills slightly later, but still protecting cash by a single day is $7,000 cash difference. So for those average businesses at their 109 days at the moment, if they were to improve that metric by 3, a day each in inventory, receivables and payables, that is $39,000 of cash for the average business that I've been working with over the last month or so. And again, that is a very wide cross section. That's right down to a couple of quite small businesses and things there. This stuff does actually make a big difference. And generally, when I'll run that sort of analysis with a client, they'll ask me, what does 2 days look like? What does 3 days look like? And suddenly, when you can see how much cash that maybe returns into your bank account, it suddenly becomes worthwhile to really focus in on these sorts of things. Some strategies there on the next slide for what you might do in these sorts of areas to bring those days down by a single day. So when it comes to your inventory, look at a few strategies and things there. How much inventory do you need to be holding on to at any given time, and why do you need to have that? There will be different answers for different businesses, but for those of you that do have a reasonable amount of stock, and a reasonable amount of stock is relative to the size of your business. Okay, even if you're sitting there on $4,000 or $5,000 worth of stock, that can be significant to your business if it's quite a small business there. If you can shorten that working capital cycle and turn that cash around quicker, you're still going to see significant improvements in your ability to keep creditors happy, pay your wages, meet your bank commitments, pay your tax, all of those sorts of components. So, are there some obsolete items of stock there that just sit there and don't move? And can we do something, like a bit of a sale or try and find a different way to get rid of that or turn it back into some cash if there's a whole bunch of stuff that's just sort of stagnating? We bought in a different time when things were moving and suddenly everything slowed down. The cash is probably more important to you than maintaining that. So still selling that at a little bit of a margin, even if it's reduced from what you might normally be used to, might still be a better strategy than just that being tied up there and not achieving anything. Can we look at drop shipping options? Is there more of an option where we don't actually have to hold the stock? Can we get a few of these relationships and things going where we can still have the customer relationship and still form the sale, but fundamentally we can tidy up how quickly that stock's moving from a third party to our customer and not necessarily have as much of our cash tied up there? Or can we look more at a just-in-time sort of system? If you're, again, a little coffee house or someone like that, how much coffee and those sorts of things do you need? Can we reduce that and have slightly quicker orders and things there? If you're construction business or trade business, how much of your raw material? Now, you obviously don't want to compromise on your efficiency or your ability to meet all your sales targets, but just be critical around how much cash is tied up in a few of those areas. Equally important is the production side of things and whether you're selling goods, whether you're a builder, manufacturer, compiling things together, or whether you're a service business like accountants, lawyers, or selling your time, consultants and things out there. I see far too many of those businesses that don't get things finished in a timely fashion. They are constantly sort of picking up a new project or getting things 75, 80, 85% of the way, and then because they can't sort of quite get everything done nice and easily, they'll go and pick up a new job or start something fresh, and you get to the end of a billing cycle, whether it's weekly or fortnightly or monthly, and there's always a whole bunch of excuses as to why I can't actually bill that job yet. I haven't got that job to where it needs to be that I can send an invoice, or I haven't communicated well enough with this customer, and if I sent them an invoice now, they'd get grumpy. At the end of the day, you're still paying all the wages, all the associated costs of that job. So one, what can we get done faster and get out in that billing cycle? If you're working on a weekly billing cycle, have the pressure on the system there that, as you get closer to the end of that, what can we shift? What can we move? What can we get done in the next couple of days that means that we can actually send an invoice that we might not otherwise have been able to send? Or towards the end of the month or the fortnight or whatever that cycle looks like. The more that you can get to that stage that you can now actually send an invoice, that's going to shorten up the time that, the amount of days that you've got cash tied up in that inventory and or production side of your business. Receivable side of things, chase your debtors. A sale is not a sale until you've actually got the cash back in your bank account. So communicate very clearly with your customers what your expectation is around payment terms. I said this in the last seminar, the days of sending out a monthly bill and getting paid on the 20th of the month following or the final day of the month following, I think are extremely outdated. I think we now live in a system. We've got 7-day banking now. We've got transactions and cash moving on a daily basis. You need to look at how you can shorten that debtor cycle up. At the very least, I'd be looking at 7-day payment terms, and even quicker than that. Once the job's done and finished, if you've had those good conversations, you've set that expectation, why shouldn't you be getting paid in the next day, 48 hours for the work that you have done? You're still paying all of the costs and the associated expenses of that. It's all about just setting expectations with your customer and articulating that. Maybe review your terms of trade as far as that goes. If you do have a terms of trade, make sure that is clearly contractually explained when you're setting up relationships with a new customer. But the days of you finishing some work on the 1st of the month, billing it at the end of the month and not getting paid till the 20th of the month following, 50 days even when things are working really well, don't fall for that trap. Try and turn that cycle around much faster. Be the squeaky wheel. The saying squeaky wheel gets the oil. Be that squeaky wheel. Be far more aggressive about this side of things and getting paid for the hard work that you have done more so than anyone else out there. And generally, you'll find most of your customers will, if nothing else, just to shut you up, will actually pay you, and that's cash flow that's moving through the system. Don't be passive as far as this stuff goes. And then your payable side of things, constantly reviewing and looking at that, looking at your supplier agreements, looking at, negotiating exactly the opposite of what I've just suggested on the receivable side of things. Where can you sort of space out or take a bit of the pressure? Obviously, we're seeing an awful lot of increases in interest rates and repayments and things there with our banks. Our banks, particularly the ANZ, they're wonderful for sitting down and having a conversation, particularly if you've got all this wonderful information and things to hand, you've identified a bit of an issue, make that time and look at ways that you can actually maybe restructure and do a few things and build that relationship with your bank. That's a key part of what they provide there for you guys. Have the conversations, don't bury your head in the sand, look at ways that you can take a little bit of the cash flow pressure out. There's tax finance systems and things out there now, conversations with your accountant, you can actually spread the load of the tax burden. If quite often there's different times of the year where the tax burden is a little bit onerous, particularly if it's in a bit of a downtime seasonally for your business. There's options and ways that we can manage that, but it's about having the conversation, recognizing where those cash flow pressures are going to be, and trying to be proactive and doing something about it when it comes to the payable side of things. Outside of that, some other cash strategies that I would suggest that you employ. A cash reserve is a really, really useful thing to have, and 3 months worth of overheads as a bit of a cash reserve is a great aspirational goal to try and get to. Probably a little bit challenging in the current climate if you don't have that reserve, a way to build that from nothing. But again, Rome wasn't built in a day. Brick by brick, if you can just set aside a little bit of cash on a weekly basis, particularly if you're doing good things around your collection and trying to get your production and your inventory numbers down and working hard as far as that goes. If you can get that bit of a war chest aside for when times get a little bit tougher, it's a really, really useful strategy to do. Very difficult to do overnight. It's something that you do need to build up to over the course of 6 months, 12 months. Just squirrel some cash aside when you can, when it becomes available, and that is your war chest, your rainy day fund as a business owner, and it takes an awful lot of that mental pressure and things away when you've just got a little bit of of something to fall back on. If you suddenly have a couple of big customers who do go a couple of weeks without paying you, suddenly you can go to that rainy day fund, keep paying your wages, keep paying your bills as they fall due, and doing some good stuff there. And the other one, reiterating what I talked about in the last session, is still really be critical around that overhead side of your business. What do you need? What's crucial? What's not? What can you renegotiate? What are you not getting a return on investment for? What can you put a bit of pressure onto your various suppliers and providers to maybe scale back what they're doing or find a different way that's a little bit more cost effective for you? Again, that monthly look at your overhead side of things is a really good process to get into, to make sure that we're not wasting a whole bunch of cash on things that we're not getting any great investment for our business. And there were some good examples of that in the last session. So the final thing I wanted to leave you with before we throw over to some questions is just the importance of diversifying revenue and not being 100% committed and 100% reliant on just the standard way of you doing businesses. And this is a conversation that I have with business owners on a regular basis, particularly looking for sustainability in their business and making sure that they've got options to meet whatever challenges sort of come down the track for them in the future. But looking for different ways that you can actually create a different way of making money, making revenue. It means that if there's a major shock to your existing business or the way that you're doing things at the moment, that you're not quite as reliant, and it's a great way of mitigating a lot of the things that you will probably find is on your risk chart once you've created that. This needs time as well. It's not something that just sort of naturally happens. You do need to create the blue sky thinking space for this. So I'd encourage you to maybe on a quarterly basis or something, just to sit down with yourself, grab a coffee and really start to think about how can I find a different way of creating a different way of making money, a different way that I can use the resources in my business to find a different way of creating that revenue. I've got a couple of examples here of a few businesses I've worked with recently. So we had a coffee roastery business that I've been working with, who were just basically doing everything from a retail point of view from their own cafe. Through COVID, they started a wholesale online sales business, supplying their roasted coffee beans to a whole bunch of other hospitality providers and things there. They did all the hard work during that lockdown process. That side of the business for them is now 130% of their original retail business. They've still got the retail business going, but they've basically created a slightly bigger business on the side, just without any extra resource or any extra wage cost or anything there, just by looking at a different way of doing things. An adventure tour operator that I've done a bit of work with used to do just guided hiking and trekking tours in a remote spot in New Zealand. They have now gone and collaborated with a whole bunch of other providers in their wider region. They've sort of thrown the net out, on a 250 kilometre radius of where they used to solely provide their service, and they've now become a bit of a one-stop shop for creating packages for tourists into their region. So rather than just trying to find those guys who would come and do their treks and their guided walks, they will now provide an all-encompassing package. They've got a 3-day, a 5-day, a 7-day package where they put together different food experiences, and working with a whole bunch of other tour operators in their region, and are now sort of getting paid directly there from customers, and also clipping the ticket. They've got good relationships and good supplier agreements with a whole bunch of those other tour providers in their region. That's about 63% or about 63% the size of their original business now as well, and growing quite rapidly. And again, no extra cost, no extra resource to be able to provide that. And the third example, a builder who was, he was no longer wanting to be out on the tools, running quite a sizable building group here, decided to start using a little bit more of his downtime, and now runs a consulting business where he offers a $1,500 package just to come and have a half-hour consult with homeowners, and basically leaves them with a report that he can produce very quickly, what he would do, the top 3 ways that he would create extra value into their home, just for them to sort of put aside for their next building project or renovation project or anything like that. So in the last 6 months, he's generated $75,000 worth of extra income, again, just using his expertise and consulting ability without, a little bit of his extra time. He has to shout a coffee to go and achieve that, but effectively that's $75,000 worth of extra income that he would otherwise have probably just been sitting in the office watching his building teams go out and doing things for him. So there's plenty of different ways that you can use your skill sets, use the resources that are available to you in your business to diversify your revenue and look at a different way and just mitigate a bit of that risk and be a bit aspirational. And again, a great way to make sure that your business continues to thrive and be sustainable for the future when you've got a couple of other eggs in that basket. So look, that's a lot of talking for me. It's amazing how quickly 50 minutes disappears and 3 hours across these sessions. I'll now throw back to Crystal.
Thanks, Matt. Another great session. So we're now going to move on to how ANZ can support our customers. And so the great thing about this, we've got our what we call our A to Z review, and that's a complimentary service provided by the ANZ. We've said this in every webinar. If you do find that you've done some cash flow forecasting, there's a little bit of speed bumps on the horizon, or you can see that you've got some leaner cash flow months, please do come to the ANZ, get on the front foot, or your bank, and talk to us about how we can help you. We'll also talk about your business goals. We've got our business insights. So these are industry specific. They're really in-depth analysis, and you're going to get expert opinions on the economy. So really specific to your industry. So please make sure you do have a look at those. We've got our Biz Hub. Matt, thank you, who's an advocate, talked about some of the tools that we've got on Biz Hub. So we've got around cash flow forecasting. Head over to Biz Hub. It really is a one-stop shop. Lastly, our ANZ Economics Outlook. So it's really important in business that you kind of think about what's happening in the economy and how it's going to affect you. So we do publications that are really comprehensive projections around the macro economy and trends in New Zealand's financial markets. So think about those in terms of your own business and what you think that you will need and that you could use. We're always here to support our business customers, and one of the ways we do that is these webinars. So lastly, on that, before we do finish today, I wanted to do this massive shout out to Matt. It takes a lot of time, effort and energy to put together the presentations for these webinars, but also to be involved. On behalf of the ANZ and our fabulous audience on this webinar, Matt, thank you very much. 1, 2, and 3 have been really, really inspiring. I know our attendees have all learnt something, so we'd like to thank you very much for all your time, your effort, and your energy. So
My
do you have a few
absolute pleasure,
last
guys.
words?
Yeah, my absolute pleasure. I'm really passionate about this sort of stuff. I know how tough it is out there in the world of small business, and hopefully there have just been a couple of good little pointers. I just come back to just doing the basics and doing them well and doing them on a regular basis. If you're doing that as a small business owner, anything is achievable. You guys are amazing. You really are the backbone of our economies here in New Zealand. Keep fighting the good fight. Keep doing the amazing work that you are all doing. Use some of the wonderful resources and tools and people around you. And I wish you all the very best. I'm always available if anyone does want a follow up and things here. And ask anything a bit more direct. But thank you very much for your time. I think even just coming along to these sorts of things is an amazing first step that you're doing in your businesses, and all the very, very best of success for the rest of 2023.
Thanks, Matt. Congratulations for taking time out of your business to work on your business, something that's really important for business owners. These webinars are an opportunity for you to learn and grow as your business is learning and growing as a business owner. So from all of us, thank you very much for attending. We appreciate your time and the effort. Thank you very much and have an amazing day. Thank you.